Hi everyone and welcome back to my final morning report task appraisal on Thursday the 29th of October with me, Rich Perrin, market analyst at Hantech Markets. Let's look at gold, and apart from the euro, I would say that gold was probably the big loser out from yesterday's Fed meeting. We had a sharp intraday reversal. It was up around 1180 and just absolutely got panned by that hawkish Fed statement. Now, we've seen a close well below the support of that, actually, the old support of 1158. You saw a close at 1152 figure, and that is, the low is 1152 figure, close around 1155. So, big intraday reversal, big turnaround in sentiment. It looked as though that the bulls were regaining the sentiment, but that has now been scuppered, and you're continuing on these momentum indicators on the slide. You've got the stochastics which are falling away. Interesting though, I will add that I have been looking out for a key reaction low between 56 and 1170, sort of 1170 being an old pivot, key pivot support, and 1156 being this reaction high here. I've been looking out for a key reaction low in this correction. Obviously, we've now broken below that. So, what do we do now? Well, looking at the momentum indicators, it's still not drastically bad. You could still say that that is an uptrend still intact on the RSI. And I'd say that this is just still counter to a medium-term sort of recovery which we've got in gold. We've still got this near-term slide, and until I think we see a move below, in my opinion, I think a move below 1151 now would neutralize it. This is the hourly chart. See this 1151, which is a bit of a pivot supporters as well. If you saw a drop below that, I think that sort of now would negate the positive outlook on this recovery, and then what I'd be looking for is a move below 1136.50 to turn more negative. 1136.50 being this reaction low that we had sort of early mid October, and I'll zoom out to show you 1140 being sort of a key band of support as well. So 1140 being a key level. So once you start dropping below 1140, I think, and then sort of you lose that 1136.50 low, I think that then you'd turn more negative because you'd be sort of back below pretty much all the moving averages. You'd be seeing momentum indicators turning negative still. I mean, this stochastics move is still corrective near term. I wouldn't necessarily say that it's really ultra bearish yet. But momentum indicators are sliding on the near-term basis, but still, I think you're just hanging on, and I say that hanging on to the near-term reasonably positive outlook. Now, within this slide that we saw yesterday, that was obviously the Fed meeting, and we've seen a slight recovery. So, exactly how the gold price reacts within this recovery will be really interesting, because you've got the initial sort of lows, I suppose you'd argue, of this range, sort of trying to be tested at the moment around that 1160, 1162 mark. If you see a move above that into this resistance band, that will be interesting, because then you start to think about, well, 1170 will be then the next sort of level that we need to talk about. 1170 being sort of, again, an element of resistance within this chart. So we need to see how this unwinding period goes, because obviously the momentum indicators have got a little bit oversold, and perhaps they need to be unwound. But look, interesting, I've just really noticed this on the hourly RSI. We're not actually negative on the RSI. You've got positive, you've got really strong momentum that turned around, but you didn't really drop below 30. Interesting, because that is what we've seen throughout this range, really. So that is an interesting development as well. So that sort of leads me to be a little bit more positive as well. But you can see here the implication of this sort of 1162 overhead resistance area. So that needs to be broken as a near-term basis if this recovery is to continue. But lots going on in this gold chart, lots to think about, and I wish you good luck in your trading today, and I'll speak to you again tomorrow. Thank you.